What's good, brothers? So y'all might have already seen the day 2 video. I'm re-recording it just cause that light-skinned nigga in the first video talking about some need more energy, bro. They're gonna click off. Like I'm about to be on here breakdancing or some shit. But nah. I wanted to re-record it just cause I was tired of shit making that video and I was talking slow and all that. And I'll never let no light-skinned nigga tell me what to do. We're gonna get into it, dog. Just gotta do a quick intro again. My name is Isaiah, or Zay. Call me Zay Trader. Born and raised in Jersey. I'm in college right now, about to graduate in the spring. Other than day trading, I've been day trading for a little over a year now. Other than day trading, I'm a business owner, co-founder with Tradion Dorian, that light-skinned nigga I was talking about. Yeah, man. So we gonna get into it. So we're gonna be talking about candlesticks and market structure. So candlesticks is pretty easy to understand. Candlesticks are literally what you're looking at on the charts. All these little things on the charts are all candlesticks. They're all candlesticks, bro. Very simple to understand. So just to understand the different types of candlesticks, I'm gonna draw some out for you. We're going to say this is a bullish candlestick. Bullish. And then I'm going to draw a bearish candlestick for you. Bearish candlestick. And the difference between a bullish and a bearish candlestick is just one thing. It's where the open and the close is. So I'm going to draw these out for y'all right quick. So just to explain what the mechanisms of a candle is, I guess you could say. They got the body of the candle, which is this little thick part right here. And then they got the wicks of the candle. So from the top wick, the tip of the wick, pause, to the bottom of the wick down here, that's the full range of price. And each individual candle on here is a specific price or a specific time period where price made that move. So like right here, this is, what's that? 3 o'clock, I guess. So this is a 3 o'clock candle. That means for the whole hour from 3 to 4, price started down here, moved all the way around here. But the difference between the wick and the body is, for the body, for a bullish candle, which means these green candles, which is an up candle, it means price went up. The open starts at the bottom for a bullish candle. Let me move that right quick. Yeah, the open starts at the bottom. And the close starts at the top. So for a bullish up candle, a green candle, price started here, then moved from this range up and down, and then closed right here, which is what makes it a bullish candle. For a bearish candle, these red candles, down candles, the only difference is it opens at the top and closes at the bottom. So like for any of these red candles, for this red candle right here, this was the whole range from the top of the wick to the bottom of this wick. That was the whole range that price went throughout that whole hour. And then the open started up here, and then it did all that movement, and then it closed down there. And that just shows you the range for that time frame, and you could use that later on once you start figuring out how time frames work and how price works with different videos, understanding the daily range and all that type of stuff. But that's really all it is for these type of candles. I'm gonna go over 2 other types of candles right quick, like specific candles. These go for both bullish and bearish. There's these candles called doji candles. Now what a doji candle is, simply how it's explained is it represents indecision in the market. So as I said before, the body of the candle, the thick part of the candle, represents represents stories of the candle. The candle is going to tell you a story, and that story is telling you which way price is going. Like you see this green candle right here, this huge body of this green candle. This is also the candle I'm going to talk about next, but this huge green candle right here, it tells a strong bullish story. Let me charge this shit. Cause niggas think I'm gonna record this again. Smoking something. But nah. This a bullish candle that tells a strong bullish story to the upside. It tells a strong upside story. So you could use that candle and be like, oh, price might be still shooting up. Especially on higher time frames. Higher time frames are stronger compared to lower time frames. But like this hourly candle is telling a strong bullish story compared to, let me find another bullish candle. Like right here. I'll mark it out for y'all so y'all see. That candle right there with the little ass body. You see the long wicks and the little ass body right here in the middle? That's not telling a strong bullish story, but it's also not telling a bearish story. It's just telling nothing. There's not no story for real. It's left up for interpretation, and there's nothing to interpret because it's indecisive. It just means price is indecisive right here. So what that means, how you could use this is be like, just be patient. Don't make any biases yet. Wait for the move to the next direction. Like right here, see now there's a red candle with a bigger body, and then another red candle with an even bigger body, which is telling more of a bearish story, a downward story. And that's how you're able to tell price, like learn more about price action and learn more about how price is moving by using some of these candles. And you're not going to be able to trade off just seeing a doji candle. You're not going to trade off seeing one candle. You need more like confluences to take trades. But this is a good start for you to look when you're looking at the charts. Like if price was at this candle and this candle was forming at this moment, like this is like current time. You'll see, oh, it formed a doji candle. You'll be like, oh, all right. So let me wait and watch what happens, because price could make a doji candle and end up still going back up, but it also could do what it just did and make a doji candle and shoot back down. So you want to wait. Whenever you see a doji candle, wait. And then the next candle I'm going to talk about is a rejection candle. Oh, this should look better. And here's a perfect example of the candle I just talked about before, a rejection candle. What shows a rejection candle is it only has one wick. Like a bullish rejection candle will only have a wick at the top. It won't have a wick at the bottom. That means price started up here and didn't go any lower. It just shot up. And that's more of a bullish story because it just shot straight up. Throughout this whole hour, price was so strong to the upside. Price was so strong with buyers that it shot up. And that means that gives you a good like tell to that price would probably still be going up. Again, you don't want to use just a rejection candle to take a trade. You want to just use that in confluence with other things to make your trade a higher probability and give you more like confidence in your trade. But yeah, and they have bearish rejection candles as well. Let me see if I can find one right here. Price started right there and then just dumped down for this whole hour, and then you see the move after. Price went all the way down after that. And it's not 100% always going to work out like that, but it happens like that a lot of times, and it happens like that every day. You'll see examples of it, like a bearish rejection candle right here. Price went down, next candle went down too. But yeah, in terms of candlesticks, that's really all the ones you really need to worry about. So now let me make sure this shit's still recording, bro. I'm gonna be sick if it's not. Alright, bet. So now we're gonna get into market structure. So for market structure, the best way for me to explain it to you is look at the market movement as the ocean. and you a surfer, and you trying to, like, if you know what surfing is, bro, you want to ride the waves. You want to be on the ocean when the waves is good. So there's 3 different types of movements in market structure. Obviously, there's other ones you might hear people talk about, but they all fall under these 3 categories. There's an uptrend, a downtrend, and then there's accumulation. And accumulation will become more important in later videos, and we'll expand on it more, but I'm going to touch on it a little in this video. So, the ways to tell the trend of price are with highs and lows. And let me explain to y'all what a high is and a low is right quick. Easy way to tell is just spikes in the market. So you see these 3 candles right here. These 3 candles right here. Let me mark it out so you see. These 3 candles right here. This green candle in the middle pokes out the most. So and the wick pokes out the most. So this candle is that's the high. And you see that everywhere. Right here, another high, another high. The same way with the lows. There's a little imbalance right here, but still, this is a low. All the spikes on the charts are highs and lows, and you just see it like this: a low, a low, a low, a high, another high, another high. And you see them on all time frames, all these different time frames. Price is gonna look the same. The candles are gonna be the same. They're not gonna be the same like structure, but they're gonna, like, all these candles you'll see highs and lows on all these different time frames. And you'll see rejection candles and doji candles on all those different time frames. But yeah. And another thing with those candles, I don't know if I said it already, you want to wait till a candle closes. So let me see. So right here, there's 42 minutes left on this candle. If you're day trading, you're not going to be taking trades off the hourly. I'm just using this to show you how the structure of the market works. But you're going to be probably taking trades anywhere from the 1 minute to the 15 minute. So you don't want to be taking trades on the hour. But say this was like a 15-minute candle, you want to wait for the full 15-minute period to close before you make an assumption or you make a bias. You want to wait. But yeah. So we went into what highs and what lows are. So let me explain to you how to tell what an uptrend is using those highs and lows, and what a downtrend is and all that type of shit. So yeah, I'll use this example right here. My fault, this should be tripping once it gets long. But yeah, so easiest way to tell, if you're just looking at the charts, you can see when price is going up. But when you're in the middle of a trend, like you're in the middle of seeing price, you can see it right here. This is price right now as we're making this video. You see a high up here. Hold up. See a high right here. And then you see price make a lower high. Right there. And then it continues to make a lower high. Then a lower high. Then a lower high. And then it makes a lower low. A lower low. A lower low. That means price is currently in a downtrend. Right here, price is currently in a downtrend. So what makes a downtrend is lower highs and lower lows. And that's what would be a downtrend. See how it shoots down? You don't even have to mark out the highs to see that price is continuing to go down. But like, see price right now, how it is right now, it went up, it made a high. This high is lower than this high. If this high doesn't take this high out, then it's still on a downtrend, and it's going to end up going back down and probably make another lower low because it's at a lower high right now. But you obviously have to wait and see. But yeah, that's what a downtrend is, and common sense would tell you what an uptrend is the opposite. So you see right here, price is on an uptrend, it's going up. You see a high, a higher high, then another higher high. You see these lows, makes a low, and that low is higher than this low. And again, this is all on every time frame. You can see it. You're gonna see uptrends on every time frame, downtrends on every time frame. Sometimes there might be an uptrend on the hourly and a downtrend on the 5 minute. Sometimes price just does that. A lot of times that's what we call a retracement, and we'll go over that in other videos. But so yeah, so a downtrend is lower highs and lower lows, and a uptrend is higher highs and higher lows. And that's the best way to look at it. Go on the charts and mark out lows and highs, and you can see higher high, higher high, higher high, higher high. And then when it wants to break down and break a structure, you see it's a higher high, and then it ends up making a lower high, ends up making a lower high, and then it just dumps down and does all that. So you can see that. And price just gives it to you. This shit is not up for interpretation. Price is just, we all looking at the same charts, bro. Price is not up for interpretation. You have to just be able to read this shit clearly. You're not making what you want out of the price. It does what it does regardless. Everybody's chart's gonna look the same. So yeah, and back to what I was saying about the ocean. So like, if you're a surfer, right, you're gonna wanna hop in the ocean and surf and catch waves when you see big waves. You see when the ocean's moving, right? So the same way with the charts, like an uptrend like this, that means it's big waves. You see these waves going up, going up. Even the downtrend, you see these waves going down, going down, going down. And with this day trading shit, you make money whether price is going up or going down. You either want to buy when it's up and sell when it's going down. So you want to catch moves, because the best waves and the best rides you're going to get as a surfer is when there's good waves on the ocean, aka good price action on the charts. And the last thing I was telling you about, the third part of price action or market structure, is accumulation. So what accumulation is, like I was comparing it to the ocean, is like trying to catch waves on a lake. You do not want to trade accumulation. I'm gonna write that right here for you, because once y'all start trading, y'all gonna get little dopamine hits after winning a couple trades, and then y'all gonna be like, price not gonna move in your way at certain times, and then you're gonna see accumulation and be like, oh yeah, bro, I could take this trade right here, it's gonna work out, and then get cooked, and then you're gonna torture yourself. Do not trade accumulation. Whenever you see sideways price action, it's gonna be easy to tell, bro, because you're gonna see the uptrend, the big up moves, it's gonna be shooting up. You're gonna see big down moves, you're gonna be shooting down. Accumulation is the middle between the two. It's price just chopping sideways, 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 just going this way, bro. Yeah, just price going sideways, bro. It's price chopping, 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 not making any real moves to the up or the downside. And when you see that, be patient and hop off the charts. You don't have to do anything but be patient and wait. You wait for a move out of accumulation to figure out when you want to take a trade. Like I said, it's just like the ocean, bro. If you're a surfer, you don't want to if you're a surfer, bro, you don't want to hop in the ocean when there's no waves. That's pointless. You're just going to be sitting on your surfboard. You want to hop in the ocean when there's big waves and you could catch big moves. That's what you want to catch when you're day trading. You want to catch big moves to the up or the downside. Because imagine trying to hop in a lake that's not having no wave and you're trying to surf. You're just going to be paddleboarding. Like, it's pointless. But yeah, bro, do not trade accumulation. This is all, like, accumulation is very simple. It's just sideways price action. It does not move anywhere big, or like, it takes no moves big to the up or the downside. And that's the easiest way I could explain it to you. But yeah, man, that's all for real when it comes to price action, market structure, candlesticks. There are going to be more videos on price action, specifically understanding like the intricate parts of price action, but this is the basics of market structure and candlesticks. This is day one shit that you need to know when you're looking at the chart specifically. So yeah, bro, keep your eye out, turn that notification on, subscribe. We are dropping a video every day. another video on the 3rd, which is today because we re-uploading this video. But yeah, man, we dropping those videos. Lock in on here. Follow us in the Discord. If you want to ask any questions, you could comment below. Hit us in the Discord. We'll probably get back to you way quicker. And then yeah, man, we live trading restarting on the 6th, Monday. Live trading every morning. And yeah, ain't too much else to say. Keep watching these videos. You're gonna learn how to trade. Watch our live trading sessions. You're gonna be able to make some money with us. And it's up. 2025 is up, man. And we out.